Whether you have $1,000 in your account or whether you have 10,000 bucks in your account, if you are looking to grow your account, small or large, what I'm going to go over in this video is vital, and every single person that listens to this advice starts to slowly build consistency and see a change in their trading. So I'm going to go over exactly what I recommend everybody to do. And then I'm going to get into some actual trading examples so you can visually see it better and then start to implement it in your own trading. Before we get into it though, if you're watching this video and you have not already followed me on my Instagram at InvestiTrade, I'll post a link in the description below to follow me. But a while back, I made a post about growing a small account, and that's what this video is going to be on. I've made a video like this in the past as well, because like I said, everybody that listens to this advice starts to see a change in their trading, and I'm going to go over these very key points. So the first thing I recommend, and again, if you are looking to build more consistency, maybe you have something that works out for you, but you're just looking to grow your account, or maybe you're just simply struggling and you're trying to find direction in the market. If something's not working for you, switch up your approach, because one day it's not going to magically work unless you make the change. So what I recommend everybody to do, whether you trade options or futures, because we're going to go over both and what I recommend, but the instruments that I recommend trading is the S&P 500 and the NASDAQ only. If you can limit your focus to these two names, although they are only two instruments and you're missing out on a breadbasket of other stocks or other instruments, if you can limit your focus and have a laser focus on these two names, there will be an ample amount of opportunities that you can extract profits out of the market strictly and only trading these names. In fact, the way I'm trading in the current market conditions has been a sole focus on the S&P and the NASDAQ, and I've been trading the best that I have ever been trading, along with other members in my community. So if you trade options, what I recommend doing is, a lot of people think that if they have under 25,000 bucks, they can't day trade. If you have under 25,000 and you want to avoid that pattern day trader rule, all you need to do is have a cash account, and you can make unlimited amount of trades trading the S&P and trading the NASDAQ on a daily basis under 25,000 without getting flagged. Now, if you trade options, I recommend trading SPY options or QQQ options, especially as a beginner, especially as somebody that's looking to build their edge and grow their account. So if you trade options, go to a cash account and trade SPY and QQQ. Now, a lot of people think futures are very complex. They get intimidated with them. In fact, futures may be easier to trade than options for a few reasons we're going to go over in this video. The first thing is futures have no PDT rule. You don't need $25,000 in your account. However, you do need a margin account, and I want everybody to understand there are risks with margin accounts. However, if we implement proper risk management, the risk should not scare us, and you do not need a lot of money to trade futures. A lot of people see my charts and they see me post the S&P 500 E-mini futures. They see 4,000 and they think they need 4,000 bucks per contract to put that trade on. In fact, sometimes futures trading can be cheaper than options, and it can be more beginner friendly. You could start with as little as 500 or 1,000 bucks depending on your broker and the margin requirements. And this is the ES and micro ES contracts, or the NASDAQ contracts, or micro E-mini NASDAQ contracts if you trade futures. So now let's look to the chart on the left, which is the E-mini future contracts. And let's just hypothetically speak, and let's just look to say we want to buy the market inside of this green buy zone, and we're looking to be bullish or long the market when the E-mini futures are around 3,945. So we're long around 3,945, and the closing price end of day is around 4,005. That is a 60-point gain from 3,945 to 4,005. We call that 60 points. 1 point on the E-mini future contracts is 50 bucks, and on the micro E-mini contracts, which is /MES, which is what I recommend every beginner trader or a trader with a smaller account to trade, it's going to be a tenth of the E-mini contracts. So 1 point on the micro E-mini contracts is going to be a $5 profit. So if we were to get 60 points on an E-mini contract, that would be a $3,000 profit per contract. And if you trade multiple contracts, your profit just goes up. Now, depending on your broker, it might cost you as little as $50, $500, $1,000, depending on the instrument we're looking to trade. And being able to capitalize on a $50 profit per point or a $5 profit per point if we're trading the micro contracts, it's a very good instrument to trade. It's highly leveraged. And with a highly leveraged instrument, there's higher risk. However, with trading futures, our risk is easier to manage versus options. However, with options, we also are going to be able to get higher percent returns, which does favor a small account more. In this example, and these moved from a low of 60 cents into a high of $3, which is about a 400% return. So if we were to buy 10 contracts of SPY calls, which costed us $600, we're going to get a $3,000 profit out of that as well. So now let's get into more of the trading setup aspect to this. The reason for this is they are the most liquid markets in the world. They are very liquid, meaning the volume on these names, 1.8 million versus an average of 2 million. If we were to look at the contracts of the options, they are highly liquid. 100,000 contracts traded, 50,000 contracts traded, 40,000. So they are very liquid. You're not going to have so much slippage, and the spreads, meaning the difference between the bid and the ask, has a very high depth. There's a very large order book. It's not very thin often. Because of this and the highly liquid nature of them, you're going to have many participants trading them. You're going to have a lot of volume. You're going to have a lot of volatility. And because of that, it's easier to read, it's easier to chart, and it's easier to know when not to trade versus when you're going to spot good opportunities. Because of all these factors, it's going to be so much easier for a beginner trader to learn these and understand their personalities. A large portion of trading is an instinctual or like a gut feeling or knowing the personality of the instrument you're going to trade. And if you have your laser focus on these two names, you're going to know the personality of these instruments. And day by day, you're going to get better at trading them because you know how they move, you know what to expect, and you're going to form an edge or a strategy around them because you're focusing only on these names and you don't have distractions elsewhere, scanning for stocks, looking for the highest gainers, or looking for what everybody's talking about on Twitter that may be too crowded. A lot of people have too much noise in their trading, and too much noise is going to block out our vision for what's right in front of us. And the best thing that's always going to be right in front of us, in my opinion, is the S&P 500 and the NASDAQ. And also, there's going to be tons of setups on a daily basis. Don't think that because we are only watching the S&P or even the NASDAQ NQ, don't think that just because we're only watching two names, there's not going to be good setups. We can capitalize on quick little 5-point moves or 10-point moves. Here's an example of a trade that I took on Friday the 24th. It was a little over $10,000 profit, traded 8 contracts. My planned risk to reward was 6-1, and I got about a 5-1 risk to reward by the time I took profits on the setup. So a little over $10,000. Again, futures are highly leveraged. So now pulling up the Discord, this is the intraday commentary tab. This is where I post my thoughts throughout the day, every single day of what I'm watching, why I'm watching it, and potential trading scenarios that are going to form in real time. So at 11:25, I said I'm trying some longs at 3948, targeting 3965 first, and then 3980. Again, I've been pretty much trading future contracts. It's just easier for me to manage my risk. I don't have a time aspect, and I could exponentially increase the gains just by increasing my trading size. So I'm long down here at 3985 when the market looks just like this, what you see on my screen right now, targeting the green line first and then targeting the supply zone above. Then the market starts moving in my favor. I take profits off around 3965. I hold the remaining contracts. We come into 3980 final target, and I get out this full position, simply following the plan and understanding that I'm buying at an area that buyers were once in the market, understanding price and volume, and being able to capitalize on being on the right side of the market with the right side of buyers before the move happens, strictly focusing on price and volume. And like I said, this was a little over $10,000 profit. Now, anybody watching this, especially InvestiTrade members of the community, if you strictly trade the S&P and NASDAQ, let me know in the comments if it's working well for you, how you like it, if you're starting to see a difference in your trading. And everybody watching this, go to the comments. Let's read them and engage with other people. Price and volume are going to be the only indicators that you need. Now, if you're watching this video and you're maybe an indicator-based trader and it works for you, keep at it. I'll never deter you off of that. However, for me, I only need price and volume, and a lot of members in my community know I stress this all the time because it works very, very well and it's very efficient. Price and volume is what moves the market. The guys that I know on Wall Street personally, and they're 8-figure-a-year traders, specifically trading only the S&P and NASDAQ. Some only trade gold, some only trade oil or gas. They know the personalities of their instruments that they are trading. Example, the S&P and NASDAQ. And because they've traded them so many years, they know how they facilitate trade and they know what works the best in those markets and those conditions when opportunities arise and when opportunities are just not there. They are the markets themselves, and because of this, they work very, very well with supply and demand imbalances and even just key levels of support and resistance. Due to the highly liquid nature, reading its order flow and understanding the orders coming into the market via price and volume is going to provide a huge edge in itself. Anybody that reads the order flow, and the guys on Wall Street only read the order flow, they don't even look at charts. Anybody that does it find success. They will never go back to any other indicators. They will never go back to judging their moves off a candlestick chart or a trend line or an indicator. So because of these reasons, supply and demand zones, key levels, and order flow, which is the core basis to my strategy, and everybody that I know on Wall Street as well, works very, very well. So let's go over an example of a trade that we took. And this was posted in the pre-market plan of the Discord. Every single day, I post my pre-market plans of levels I'm watching, potential trading scenarios, and areas that I'm just looking to trade and the reason why. And every day I post the S&P and the NASDAQ because, like I said, those are the two instruments that I make the most amount of money on consistently. So on the S&P 500 on March 23rd, scenario number 1 was I first want to gauge the auction at 4022, 4034 range. This can be an area that sellers emerge that offers a good opportunity to play the market short. And to the downside, our nearest level of demand or support was 3965, 3955. So if we were to look at the left chart, which is the E-mini/ES, we have our supply zone at 4034 and our seller line at 4022. The market rallied into the supply zone and we had a very, very large sell-off from 4,040 to a low of 4,050, let's just call it. So almost a 100-point range on a daily basis. That's insane. No one's ever going to short the high and buy at the lowest price. It's very hard to do that. And if your goal is to buy the low and sell the high, just understand that it's very slim. And if you shoot for that, you're going to swing and strike out. However, let's just say we shorted the micro E-mini contracts at the high a day at 4,040. We took the market short, we expected it to come down, and our target was this little consolidation over here before the rally up. Let's just say our target wasn't realistic, 100 points lower, because that's a huge target, expecting such a big sell-off. So we're short of 4,035. Our stop loss was 5 points higher. The best part about futures is our 5-point stop loss, we're going to know exactly how much we are going to lose if we are incorrect. This is why understanding risk management is better with futures. So we're short of 4,035. Let's just say we took profits at 4,015, 25 minutes later, and we capitalized on a 30-point or 20-point sell-off to the downside. We just made a $100 profit in 30 minutes on one micro E-mini contract. To make more profits, all we have to do is trade maybe 5 contracts. Then the market sold off 100 points, and our one contract could have just made us $500 if we held for this whole move off of one contract that might have costed us only $50 or $500 depending on our broker. So that's 1,000% gain, 100% gain technically for the cash that's required on our end to trade the future contracts. Now the same trade here, we went to the options chain, I pulled up SPY puts at the money, I pasted them in here, and these charts are going to be inverse. As the market comes down, puts are going to go up in value. Puts increase as the market comes lower. So SPY puts went from a low of 77 cents to a high of $7.30. That's an 800 or 900% gain in a full day period or a 100-point sell-off. Now, when there's volatility on the underlying instrument, the option contracts are going to explode. But let's just say we bought SPY puts at 77 cents. We took profits at our oval, which happened to be right around $2.40. We just made a 200% return in about a 30-minute or an hour time period, which is really good. Our $770 just turned into $2,000, $2,500 in a matter of time, strictly just going off price and volume. So whether you trade options or futures, there will be an ample amount of opportunity. I could go over 100 other setups. I could go over all different trades that I've taken so far. If you're new to the channel, go watch my other videos. I pretty much explain and recap all my trades. One thing I want to say is trading is the most scalable business. If you're a beginner, trade 1 to 3 micro E-mini contracts or 1 to 3 SPY contracts at first. I don't care if you have 100K in your account. I don't care if you have $1,000 in your account. Start small. You don't need a large amount. You will learn by trading, you will learn by doing, and you will slowly build your edge and strategy. It's the most scalable business. So once you're consistently profitable with a small amount, you don't have to work harder to make more money. All you got to do is, instead of going 1 to 3 contracts, now maybe go 5 to 10 contracts. Following the same strategy, all you'll do is more contracts, more profits. It's as simple as that. Stop trying to hit home runs. I see people with, let's just say, a $10,000 account. They go in with all $10,000 with no edge or no strategy, and they lose it all very fast because they're swinging for a home run. And the more times you swing, the faster you're going to strike out. Detach from the money and focus on the process. The process will bring the profits. The profits aren't going to bring the process. So switch your focus to the process. Here's some members from the InvestiTrade community stressing the process. This member turned a $2,000 account into $18,700 in less than 3 months, focusing only on future contracts, journaling, and focusing on the process. Another member, $12,000 profit, longing E-mini at a demand zone. Another member, large profits, strictly trading the S&P 500 and the NASDAQ only. What a month so far. The tools to be a profitable trader, a 65% win rate, and he has a consistent calendar where his losses are much smaller than his wins. You have to make sure your losses are smaller than your wins, or else it's going to be very hard to be consistent. Creating self-sufficient traders, not signaling any trades like gamblers, like a lot of people online, $200 profit. This member, another perfect example, traded 7 E-mini contracts for a 17-point game times $50 per point, about a $6,000 profit following the plan. And here's another member. I've honestly never seen a gain this big, but he started the account at the beginning of the year with $200. And he's at $11,000. He's been trading for 3 years. Pretty crazy. And if you have a process that is building consistency like this and you're taking good trades, all you have to do is not let your ego take control. Follow that same process. And if you want to make more money, just increase your position size and don't change a thing. So I'm going to end it on that note. I hope you all enjoyed this video. I hope I all got the message out there. And let me know how you guys are. Keep me updated with this. And that's it. Peace out.